tent. We've saved the best to last. I just want to tell you how things are going to pan out over the next hour. You might know that myself and John O'Connell are both passionate football fans. Well, if supporting Southampton and Spurs counts as passionate football fans. And I know our special guest is on my side of the fence on that one, so you might get a more hostile line of questioning from John. John's going to speak to our guests for about 25 minutes, me for then probably about 20 minutes or so, and then we'll take some questions from the floor. So thanks for joining us, thanks for squeezing in, pushing fire regulations to the absolute limits, and enjoy this, the last session of Think Tank. And in order to introduce our special guest speaker, please welcome to the stage my very good friend, the Chief Executive of the Taxpayers Alliance, John O'Connell.
Right. It's a genuine honour and a privilege to welcome to Think Tank 2021 the Chancellor of the Exchequer, Rishi Sunak. Thanks, John. Again, thank you so much for joining us. And,
great to be here.
Yeah, well, great crowd in as well, so it should be an interesting session. I'm going to kick straight off. We've got some questions for you, Rishi. We've got the largest tax burden in perhaps 70 years. And of course, we've obviously been through some tough times thanks to the pandemic, but that said, the tax burden is significant. Are the Conservatives still the party of low tax?
Well, you talked about the tax burden being, the largest in, depends on your definition, right? But you said 70 years. Remember, we've also experienced an economic shock that's been the biggest in 300 years, right? I mean, that is, the Great Frost, as the Bank of England described it, was the last time they think something like this happened to our economy. And I think it's, whatever we do, you've got to put in that context, right? What I was grappling with a year and a bit ago was once in a 300-year damage to the economy. Of course, that's going to have an impact on what happens thereafter. We had to do some things during that crisis, which have obviously significant in scale, and things that come along like that have a medium-term impact on the economy as well. And coupled with that, we have quite an ambitious plan for government of things that we want to deliver on the public services side, on levelling up. My job is to grapple with all of that and decide what the right thing to do is. And as a result of all those things, we had to take some difficult, but ultimately, I believe, responsible decisions to start fixing the damage that coronavirus has done to our public finances, start building some resilience to help us cope with future shocks, and to allow us to continue delivering on all the things that we want to do when it comes to the public services side, not least the most recent announcement on investment in the NHS, for example. So that, that's how we've got to the situation which we're in. But long answer, but I'd say to you, it's not no Chancellor, especially not a Conservative Chancellor, especially not me, as I've probably spoken at these events previously, wants to have to do those things, but they are born out of a necessity and a desire to make sure we protect some things that are also really important to all of us in this room, I think.
Okay. I don't suppose you can pinpoint when, perhaps, but once the ship's back on course, should we say, and you may look at tax cuts at some point in the future. What's the signal? What's the metric, the number that we can look out for when we can see, okay, things are back to normal, we can start to look at tax cuts? What's that signal that you guys are going to be looking out for?
Well, I mean, we'll have to set out probably in the autumn an approach to our fiscal policy. We've had to suspend, in one sense, our typical fiscal rules that normally we would have to provide some guide rails for spending and borrowing. As a result of the crisis, that's natural. Most countries did that. But now that we're emerging from it and starting to plan for the future, I think it would be reasonable and indeed, sensible and responsible to put those guide rails back in with some kind of fiscal framework, set of fiscal principles, fiscal rules that will help guide policy. So I wouldn't want to preempt that. But you've probably heard me talk about this before. I talked about my principles at budget in the spring, and there's a couple of different things that you can look at. One is, and probably the easiest one for people to grapple with, is just what's happening to our debt as a percentage of GDP. Is it continuing to go up and up and up on our watch, or is it starting to be stabilised and go back down? Actually, to build some resilience for the next time one of these comes along. That is a function of our borrowing, which happens on an annual basis, and then there are ways to unpack the borrowing. Borrowing for capital investment that's going to drive up our productive growth is probably something that actually is a sensible thing for us to be doing, particularly in an environment of slightly lower interest rates. Borrowing for more day-to-day spending is probably less something that you'd want to have as part of your framework. So those are some of the things that I'll think about. Another thing would be the affordability of our debt. Given how much we have and given how low interest rates are, making sure we are building into our framework something that thinks on a forward-looking basis. What happens if those interest rates change? What does that mean for the affordability of our debt? How much is that going to cost me? So those are all the kinds of things that will go into building a fiscal framework. And until I outline that, it's hard to say exactly the timing on when we will hit some of those goals.
Okay, and on some of the work that's been undertaken or will be undertaken to repair the public finances, the increases in national insurance, namely. What was the logic behind picking that tax in particular to raise when it's focused on those still in work and employers?
Yeah, no, that's an excellent question. So, when you're trying to raise that amount of money, so £12 billion a year, there really aren't many places to go. So let's put aside, when people are being upset about the fact that we're having a tax rise at all, and that, fair enough. But given that you're in that world, then the choice is, well, how do you raise £12 billion a year? And the reality is that there are only three big tax levers we have that can raise those kinds of sums. There's VAT, there's income tax, and there's national insurance. So you've got to pick one of those three, essentially. Now, look, there's no easy or good way to raise tax, right? And most of us in this room would prefer to have lower taxes. So, this is not all of these are, in one sense, you're picking the least worst option. So with VAT, VAT is known as an indirect tax, and from an economic point of view, that's broadly a good thing, but our VAT rate is reasonably high. There's no historic link between using VAT to fund specific public services. Many people would say that VAT is quite a regressive tax, so that's not the place to go. So if you kind of rule out VAT on that basis, then you've left with income tax or national insurance. There are probably two or three very specific reasons income tax is less preferable to national insurance. I think the first one is just to think about the history of taxation in our country. When national insurance was established in, I think, 1948, it was established partly to fund the NHS. So that link between NICs and the NHS has existed for decades. So historically, in our country, it's been an acceptable way of how we fund public services, especially the NHS. So I think that's the first thing. It's sitting in precedent. I think the second thing is that national insurance spreads that burden, and not just on people, but on businesses as well, because obviously we have an employer component to national insurance. So, that means that instead of the 1.25% that we've levied on NICs, if you were going to raise that same amount of money just from income tax, businesses don't pay that directly, so that 1.25% would have to be just over 2% to raise the same amount of money. So that that burden on the individual person earning £24,000–25,000 average salary, would be that much higher every year. So that's a kind of second reason why NICs is preferable to income tax. And I think the third reason, which is particularly important for those of us, particularly Conservatives, that believe in the union, is that NICs is a reserved tax. So it's a UK-wide tax, whereas income tax has now been either fully or partially devolved in Scotland and Wales. And I think it was important, especially for the Prime Minister and the government, to be able to do this on a UK-wide basis, because we believe in the union and we want to do things, and the NHS is a UK-wide institution, and we prefer to do this on that basis. Levying something on income tax doesn't work for us, because the devolution settlement is one which has already devolved income tax. Now, look, you could have done something in England only, arguably, but that's not what we wanted to do. So if you believe in the union, you want to spread the burden across businesses as well as individuals and go with the grain of history in this country. NICs is preferable to income tax. Now, there are some downsides, obviously, of NICs, and we try to address some of those in the design of the levy. So, for example, people in work over the state pension age don't pay NICs, but this levy will be paid for by everybody. So in one sense, it's a broader base, and that's fairer. And also, there will be an equivalent increase in the rate on dividends to make sure that we capture more forms of income as well. So, we've tried to make it as fair as possible. And as I said, there's no easy way to do this, but those are the reasons why I think NICs is a better way than income tax. And people could disagree with that, but those are the facts.
And how real is that link between national insurance and a fund for the NHS? Is national insurance not just another income tax?
No, well, actually, this actually something that when we got into this, I discovered. I talked about that link from 1948. So oddly, not oddly, but actually, surprisingly, in one sense, there is a direct link between NICs and the NHS. and not just the NHS in England, but the NHS in every part of the United Kingdom, where the receipts, a hypothecated amount of the receipts from national insurance go into a separate place and are sent directly to the NHS. So it is actually a genuine hypothecation that exists not just in law, in legislation, but also in operational delivery in a way that no other part of our tax system works like that. And that was another reason, actually, a slightly more technical one, with Nick's over income tax. Our systems at HMRC are already set up to deal with hypothecation for the NHS, where the money goes, every pound from that levy, that amount, it flows directly into the NHS bank accounts in a way that doesn't happen elsewhere. So it's quite a real specific link, and that goes back to my point about this is how we've done things in the past.
Okay. And
it would take a couple of years to set up that same system for income tax, by the way.
Right, I see.
Yeah.
And thinking about, again, the measures to repair the public finances, isn't it important to also have a longer view of tax? So, if we believe that lower taxes are good for economic growth and that kind of thing, wouldn't that be better for the public finances in, say, 3, 5, 10 years' time, when we generate growth, more jobs, more people paying tax into the system? Wouldn't that be like a better, longer-term view of the tax system?
I mean, I don't disagree with that, right? And the way to deliver sustainably a lower tax economy is, as Nigel Lawson, I think, famously said, the only way to sustainably deliver that is to make sure that, your public spending is growing at a slower rate than economic growth, right? And then you can use the proceeds of that growth to lower the tax burden. So, in a long-run sense, that is absolutely something that one might want to strive for. But in the short term, as I said, we're grappling with the aftershocks of a once-in-300-year shock to our economic, to our economy and the aftermaths of that, at the same time as we've got an ambitious programme of government, of investment in both public services and levelling up and infrastructure, and we need to deliver on that in the short term.
Okay. And shifting to spending quite nicely there, you mentioned levelling up. There's obviously other big commitments like net zero and things like that, and there's a spending review on the horizon. So if we are to see lower taxes at some point in the future, we don't know when that is, and we are making sure that borrowing's under control, doesn't that necessarily mean for the maths to add up that we need to keep a lid on spending?
Well, it's not so much to keep a lid, but I think always, right, you want to be disciplined in control over public spending because, like you're saying, John, people would like to have lower taxes over time, right? And that requires us to be disciplined and focused and prioritise when it comes to spending choices. And that's what a spending review is about. We have a pie that is forecast to grow quite significantly over this Parliament. So by any historic measure, public spending over this Parliament will be growing at what are reasonably rapid rates to fund 50,000 more nurses, 50 million more primary care appointments, 40 hospitals, 20,000 police officers, et cetera, et cetera, et cetera. You'll remember all those things from the campaign. So there'll be healthy growth, the pie will be growing, but a spending review is where we focus and prioritise to make sure that money is going to the things that we really want it to go to, because we obviously can't, no one can do everything, you've got to pick and choose. So that's what the spending review will be about.
Okay. And we talked about the 12 billion a year tax increase for the NHS, and then, of course, getting the money to the NHS. The track record in the past has seen sort of extra funding eaten up by cost inflation, or not making its way to the front line through maybe higher salaries, more managers being hired in the early 2000s, that kind of thing. All this extra money being raised from working families and businesses. How are we going to make sure that it actually gets to where it ought to go? Yeah,
it's absolutely the right question to ask. I focus on exactly the same thing, and I think it's especially incumbent on us as a government, given that we're now asking 30 million people to pay more or go without, on average £180 for a median taxpayer, say, that we strive that every single penny, every single pound is really well spent and we get maximum value for it. And that's going to be the job of this Parliament. And I know it's something that the Health Secretary is completely focused on, as well as you had been hearing him talk about over the last few days. But I think that's true always, but it's especially true now that we're raising people's taxes to put more money in. We need to make sure that delivers.
Okay. And Labour conference, they were talking about value for money quite extensively, about wasteful spending. What kind of additional measures can you put in place to ensure that taxpayers' money isn't wasted?
Yeah. So, great. It's Steve Barclay. I don't know if you've had him at any of your panels. He used to be the Chief Secretary of the Treasury. I did that work when I had that job. Steve has been doing a brilliant job with me tackling it, and has now gone on to do Michael Gove's old job, where he gets to sit across government. And I think Steve will be brilliant in helping drive that kind of agenda through government, with the help of Simon Clarke, who's the new Chief Secretary, I think formerly also of your parish of supportive MPs. And I think, first of all, it's a mindset change, and you'll see some of that in the spending review. We can't keep just measuring success by how much money we spend, right? We've got to measure success by outcomes, how many lives we transform. And the work that I started as CST was to introduce some kind of performance metrics and way of thinking about life throughout Whitehall, throughout departments. You'll see us do that in the spending review to make sure that the money is attached to particular outcomes that we want to see. That's a big change, and that will make a difference. This brilliant minister called Theo Agnew, who is at the Cabinet Office working together with us to, whether it's looking at procurement, spending limits, how we do contracts, all of this stuff, arm's length bodies, you name it. So Theo's doing a brilliant job of figuring out all the areas where we can find efficiency in the process as well. But ultimately, it's all of our jobs, right? The job of every Secretary of State is a job of the government to then spend the rest of this Parliament delivering for all of you and for the country. We take an enormous amount of money out of the system every year. We did that before I got this job. We'll do it after I have this job. And we need to focus on making sure that it delivers. And that is the work of the middle bit of a Parliament. It's about delivery. And to that end, the Prime Minister is has set up a new delivery unit, which will be relentlessly focused on this. And I think that kind of signifies, that the most valuable commodity in government is the Prime Minister's time. It's as simple as that. And the Prime Minister spending, it actually doesn't take a huge amount of his time to really, really sit in a way that Michael Barber, who's a kind of expert on all these things, has talked about, to sit and focus on key delivery output for a couple of times every week can really galvanise a system. And we're trying to put in place that kind of infrastructure to support that.
Okay. And I suppose another concern on the spending side, something that you touched on earlier, debt, and what happens if debt interest, if interest rates, when they go up at some point in the future, and what that does to debt interest payments. It could be running into the tens of billions just to service the debt that taxpayers have to fork out for. So given that we're all feeling pretty maxed out on tax, how big a concern is that to you, that interest rates going up and causing that issue?
I've spoken about this in the past, and the facts are the facts, and the Office for Budget Responsibility published quite helpful analysis of this in the past, and you'll know the numbers. 1% change in rates and inflation costs us about £20 billion a year, right? It's an extraordinarily large sum of money. It's half the school's budget, to put it in context, and bigger than most departments' budgets, actually. Mm-hmm. So that's what we have to be watchful of, which is why it's important that we are disciplined on these things. And now I think they had their analysis was you have to check the exact numbers, we're about twice as sensitive to these changes as we were before coronavirus, and about 5 or 6 times as sensitive as we were at the time of the financial crisis. So as something that I need to keep an eye on, obviously this is a risk that has grown over time, and which is why when I talked about our fiscal approach, our fiscal framework, it should be thinking about that as part of it, of how we set the guidelines for fiscal policy, and we have to be watchful over these things. But that's why resilience, is really important. Our best potential protection against future threats, whether it's interest rates, whether it's another crisis like coronavirus, hopefully we don't see, is just to have fiscal headroom. And that's why in my speech I was grateful to the work of my predecessors, because they built up an incredibly strong position, which meant I could then respond comprehensively, quickly and generously in a way that not that many any other countries could, because I was doing it from a position of strength. And I want to make sure that I leave a legacy that is like that for whoever's coming next, so that when the next difficult thing comes along, they can step in the way that I did, because that's the right thing for the country.
Okay. Probably final question for me before we do a seamless substitution, but taxes are the biggest cost of living. But we've also got inflation added to the mix at the minute. Are you worried that the Conservatives may lose their reputation as a party that raises people's living standards?
But that is something that we are passionately committed to doing. I think on the inflation side, the working assumption is that most of the pressures that we're seeing at the moment are transitory in nature. They'll work their way through the system. That's very much the view of not just the Governor of the Bank of England, but also the ECB and the Fed governor in the US, who were speaking about this together just the other week. And that these people spend their time looking at all the numbers and poring over it, as do we. And many of the challenges that we're seeing here are ones that many other countries and continents are experiencing, right? And there's a strong argument that those things will pass through the system over the course of the next 3, 6, 9, 12 months, depending on the particular part that you're looking at. But the best way to improve people's living standards is to give them the skills and the opportunities they need for well-paid work. And that's why we've got a plan for jobs, and we are throwing, as I said the other day, the kitchen sink at giving people opportunities to get new jobs, to retrain, to get new skills. And with all of that, that's how we grow people's wages and raise their living standards. And I think that has already demonstrated that it's working over the past 12 months. When you look at what unemployment now is compared to what it was forecast to be, we know that that's working. That's why we've doubled down on it with an announcement I made on Monday about extending our plan for jobs into next year, kickstart scheme, apprenticeship incentives, skills boot camps, et cetera, the Prime Minister's lifetime skills guarantee, which I believe can be transformative for this country. There are 10 million adults in our country who don't have a level 3 qualification. And for the first time, they are going to have a universal right funded by the government, the taxpayer, which costs about £3,000 a person to get that qualification. And if they can get that, we know that is going to make a huge difference to their employability, to their wages, and ultimately raise their living standards. So that's the best way to do it sustainably. And I won't go on about all the other things we're doing to raise productivity in this country, but that ultimately will increase people's living standards. The super deduction, which is a tax policy to encourage investment, will help companies help to grow. Again, we're supporting small and medium-sized businesses to get new digital technology, to improve their productivity, to go on mini MBA courses. All of that raises the productivity of our small and medium-sized companies, which means they can pay their workers more, generate more economic activity. That's how we raise living standards over time. So,
okay. Well, we are going to try this seamless substitution now. So, Rishi, just for now, thank you very much.
Very good, thank you. Darren Anderton for Matt Letizia.
Very much so, very much so. Good first half, Rishi. Well done. Well done.
All right. What are we 1-1 or what?
No, I think you pretty much kept a clean sheet.
Okay.
I'm now going to try and pepper you with a few more shots on target.
Here we go. Right.
And I'm more or less I'm going to ask you about the kind of much more medium to long term than the immediate issues. But I need to start with the elephant in the room. You speak to people over the last year or so, there's a sort of sense of disquiet, disappointment, maybe things aren't quite on the trajectory they would, results are rather disappointing compared to what was expected. So I have to ask you, is it time for a change at the top? Should Ralph Hasenthal be replaced as Southampton manager?
No, gosh, it has been, it's not been the best start to the season, but it will come.
It will come.
That elusive first victory.
I agree.
It will come. But there was good transfer activity actually, and now hopefully it will pay some dividends.
Building for the future. Building back better.
Exactly. Yep. An investment for the future.
So I'm glad we started on a point of agreement. Let's see how many more points of agreement we have. So I think you very fairly said, Rishi, that the shock of a pandemic is an enormous one-off, and actually I would say for free market institutions like the IEA, we would recognise that this would be the sort of circumstances in which there's a bigger role for the state than in normal circumstances, more spending. It's a difficult time to be a deficit hawk. It's a big sort of one-off hit. And we need to pay that back over a period of time. But I want to look over the next 5 years or so. So let's imagine, the pandemic's way behind us. All of the schemes have wound down. And I'm a bit worried about what I see, because we can call this a spectacular one-off hit to the economy, and it has been in some ways. But look at the clouds on the horizon. What would you estimate the public sector pensions liability to be off balance sheet? Far worse than the national debt.
Significant.
Trillions.
Well, there's different ways to calculate it, but yeah.
I'll take your calculation.
Well, there's different. I mean, there's a net financial liability scale. There's lots of different ways, but it's significant, yeah.
And so that will be a pressure overall for taxes going up. That will be the default, whether you're the Chancellor of the Exchequer or not. These are liabilities, unfunded liabilities.
Yes. Yeah.
And my worry is this, that, and again, I'll ask you to look forward, say, 5 or 10 years, so we're out of the immediate maelstrom. The size of the state, and it's a very blunt way of measuring it, but, the proportion of GDP, which is state spending, it seems to be a fairish way of measuring it.
That is, I think.
And we're now sort of well into the 40s, right, basically, on state spending.
We're forecast to just nudge the other side of 40 by the end of the Parliament.
The other side of 40.
Yeah. Which would be a historically high level.
Historically high level, and I think it's fair to say, again, not perfect comparisons, the fastest growing countries in the world now and historically typically have had a state sector at about 20% of GDP. I think the former Soviet Union was about 70% of GDP. So we're positioned about halfway between the two. Are you kind of comfortable? Is that your long-term strategic position?
Right. Well, halfway between.
I mean, do you think that the state at 40% is, in the medium term, too large? Do you want to see it cut to 30?
I think the top-down way is one way of thinking about it, right? And that is a fair enough. That's a fair enough way to do it. And you're right. As I said, it will be the other side of 40%. By the end of this Parliament, that will be a historically high level for us. The question is that for those of us, I put myself in that category, and I've spoken at your events, right? If you think, okay, well, say you hypothetically believe, well, the state should be closer to your fast-growing economy's 20%. Which are the things that the state shouldn't do that it does today? Right.
I could list a lot of stuff, but I don't need to run for election.
Yeah. Well, there we go. Right. So many of you are in this room. You took part in the election campaign. You campaigned. We had a manifesto that promised we were going to do X, Y, Z things, and those are the things that we're delivering. And it's a pretty expansive agenda. It's an ambitious agenda, and those things need to be funded, and that's what this Parliament is about, right? I mean, maybe you'd say, well, I don't want 50,000 more nurses. I only want 20,000. Or I don't want 20,000 police officers. I only want 5,000. I don't need 40 of those hospitals. I only need 10. Or, we can go on, right? But that's what we're doing, right? We are investing in all the things that we said we would do, and those need to be funded, and that's the programme that we've set out.
Do you think, though, what I'm worried about, and this is not, I hope you would agree, a matter of mindless ideology, but a matter of mathematics. It looks, in rough terms, we're at the taxable limits of the economy. There or thereabouts. You might successfully dial up a little bit more. But in terms of tax take as a proportion of GDP, the government's taking an historically high amount. John was pointing out tax is the highest. It might be you've got some wizard wheeze to squeeze another 1% out. But if you were to look at over our lifetimes, in fact, no government of either political colour, coalition, minority government, landslide governments have really been able to squeeze more than 37, 38, 39% out of the economy and GDP, with every mix of taxes having been tried. We've had a top rate of 98%, a top rate of 40%, VAT all over the place. So it seems to me that sort of sets the limits on what politicians can honestly offer. If you want more nurses, you may have to have fewer police officers. The trade-off might not be exactly that. But at the moment, we seem to want more of everything and are bringing in the maximum amount of tax that we could reasonably expect the Exchequer to do. No? So
I'd agree with your maths. I think I may have even made a backbench speech in Parliament that mentioned the same maths that you did and pointed out that historic trend. And I think that's a fair point, right? And that's a fair challenge, and that's what spending reviews are about. And I spend a lot of my time in government explaining, whether it's to colleagues or the country, right? Exactly as you said, we can't do absolutely everything that everyone wants. All governments have to prioritise within a pie that is, as you said, large by historic standards. And I think everyone should remember that when we come to the spending review, right? Because we'll have a spending review, and all you will hear about, no doubt, is from all the people who are like, oh, well, you should have done this, and you didn't do this, and what about this, and I didn't get this. Always remember in the back of your head, when you hear all of that, hang on, I remember that chat with Mark. That pie that we've just divvied up today is pretty much the biggest that it's ever been. So, the issue can't be the size of the pie. And you might disagree, and people might disagree with our choices and say, well, you should have done less of this, as you said, and more of that. And that's totally fair. But I feel comfortable that we'll be able to defend and articulate the choices that we make, the priorities that we put in place, because those will be the people's priorities, and they'll be the things that they elected us to do, and I feel comfortable that we'll be able to defend that. You're right. There will be choices. All governments have to make choices to prioritise, and quite frankly, that it's a good thing to do that, because if you have a million priorities, then you don't have any, right? And actually, as we talked about before, we need to focus on delivering things, and that requires a bit of discipline about what we do.
Okay, I mean, my worry in talking, this is a very broad brush aggregate to Conservative members of Parliament from the IEA free market small state perspective, is they often seem to be in favour of reducing government spending in general,
Yep.
but against any specific reduction in government spending that you put to them. How are you going to overcome that in the comprehensive spending review, that everybody will expect you to balance the books and reduce spending without actually cutting any specific programme?
Yeah. Well, I think, as I said before, we're not reducing spending, right? What we're talking about is a pie that is growing. So the starting point that I think everyone acknowledges, or should acknowledge, is the pie is growing. It is growing at rates that are historically high, and it's growing to a level which, in aggregate, is very high. And I think people get that. So the starting point is, okay, there is, by historic standards, a lot of money that we've got to play with. And then the question then becomes one of prioritisation. So we're not asking people, well, you have to go without and cut this and cut that. It's just, where do we want to spend our marginal pounds? And I think partly because we've had to take this quite difficult decision on NICs for the NHS and social care, I mean, that's crystallised, I think, for a lot of people, not just in the parliamentary party, but in the country as well, a reminder that things have to be paid for. So actually, in one sense, that has been helpful for those conversations, because I think people, are now approaching those discussions with a sense of realism about what is and what isn't possible, and are actually thinking, as John was talking about before, gosh, it would be nice, one day to be able to start reducing the tax burden. And if I want to be an MP who delivers that, then I need to think about being disciplined now on spending. So actually, in that sense, those conversations are in a constructive place.
I mentioned the public sector pensions liability over the longer term. Here's something else over the longer term that not just you, but your successor's successor, and successor's successor will have to deal with, I suspect, and that's getting to carbon net zero by 2050, an ambitious target, one might say. How much is that going to cost? I mean, I'm all in favour of spending it. If we need to get to carbon net zero in order to save the planet on the 1st of January 2050, you would think this is the top priority expenditure, right? But how much is it?
Yeah, so you can't put a single figure on it. It is an ambitious target. I mean, we should be honest about that. It's one of we've adopted some particularly ambitious climate reduction targets. And the thing to say about that is, many of you will remember the campaign, and this is something that is, personally, the Prime Minister is really passionate about and has spoken about being incredibly important for the country, and he's talked about that for a long time, and he outlined what was widely considered to be one of the most comprehensive approaches to tackling this problem in the 10-point plan last year. So we've made a good start on it. But it's not as simple as just spending, right? You can't spend your way to net zero. I think that's the first important point to realise, right? It's going to be a mix of things that help us get there. Of course, spending can play a part. Regulation will have to play its part as well. We already have forms of carbon pricing in our economy with our ETS systems and behavioural change. And then probably the thing that is going to make the most difference is technology and innovation, because ultimately we're having to try and find new ways of doing things that involve less carbon. And on that, what I'd say is, look, the track record on some of these things is pretty positive, that over time we can bring the costs of these new technologies down. But I'm not going to pretend that these things are easy. Of course they're not easy. This is a generational challenge and change in the way we do things that will require us to look quite hard at how we do that.
So yeah, I would agree that it's not necessarily spending, but there are going to be real costs. I mean, even if the government doesn't spend a single dime on carbon net zero, you can imagine regulatory obligations on a whole range of companies that impose real costs. Do you have any sense? I mean, I'm not trying to trip you up here. I've got no
No,
number
no,
on my paper. What on my papers here? Roughly what is this per annum between now and 2050?
So, look, I mean, the Climate Change Committee published their views of it. We'll have them. The Prime Minister will outline our net zero strategy later this autumn, and that, that conversation is one which he's already started, and we will continue to have with the publication of that strategy on this particular topic. But I think I'd agree with you in the sense that we already have costs, right? We have levies on bills, we have an ETS system, so it's not as if this is a new thing. This has been something that's been in place anyway. And the question is, as we look at the different parts of our economy that generate carbon and what's the plan for each of those, there will be different things that happen in different places. But I said, I don't want to preempt. I'm not trying to avoid your question. It's just we're going to publish this net zero strategy in the autumn, and the Prime Minister will be talking about this some more then, as you would expect in the run-up to COP. And I think these are all completely fair questions to be asking, and I think we will have that conversation with the country at that moment when that is published.
Sure, but we can definitely agree, right? It's not going to be a trivial proportion of GDP. I mean, these are the public sector pension bill, this potential bill or costs, as I say. Yep. These are chunky items. I mean, these are meaningful numbers on the ledger.
Yeah, look, there's also the opportunity that comes with new investment, new jobs as well from some of these technologies. And I'm not going to pretend that's a panacea for everything, but you can't ignore the positive side of the ledger as well. And I look at a place up near me that's close to my heart, which is Teesside. And look at what's happening, right? Offshore wind, which has become a booming industry around the Tees Valley. It's already making money and making jobs from things like carbon capture and storage, hydrogen, etc. That gives you a sense that this can be a positive transition, right? And Humberside and offshore wind, same kind of thing is happening. And actually, quite helpfully, some of the areas which are going to be growth industries for us when it comes to net zero are particular types of parts of our country that we want to see more economic growth in. And so I think, look, yes, I'm not going to pretend that, as you said, this is not a non-trivial matter, right? I mean, this is an incredibly significant moment in the country's, in our passage through all of this. But there are pockets along it that you will see generate opportunity, prosperity, and jobs for people, and we're already seeing it.
Now, obviously, John was asking you about the NICS hike for social care. Have I understood the government's policy correctly here that for the first 3 years, this money will go specifically to the NHS to deal with things like the backlog and all of the problems we've had of, if you like, non-COVID operations and treatments having to be delayed. And then in 3 years' time, the NHS will come to you and say, great news, we're no longer in crisis, we don't need any more money at all. You can now earmark this directly for social care. Have I understood the policy correctly? Is that what happens after 3 years?
Look, I mean, the Health Secretary is going to publish, when we get into the autumn, a more detailed breakdown and of all of this. I think, look, in rough trajectory, you're right, in the sense that a policy like the DIL-NOT policy for caps and floors takes time to implement and takes time to ramp up in terms of the funding for it. So that's one profile that ramps up. And on the other side, you've got the NHS, which has got an immediate pressing need to start dealing with the backlog. But that, by definition, there's only so long you can run the NHS doing more than it normally would before it is just too difficult. So that's a pressure that should recede over time. So that's the general thesis. That doesn't mean that there's not money going into social care from day one. Of course there is, particularly with regard to the workforce, where part of what the Health Secretary is going to do is invest a significant quantum, more than any other government, in the social care workforce to provide more training, qualifications, a sense of career progression, which has been long lacking. I think that will be genuinely transformative. But your broader point on the NHS, I sympathise with entirely. It's right, as I said earlier, right? Every pound that we're taking from everybody needs to be well spent. And I think it's reasonable, as you've seen from the Health Secretary, that we hold the NHS to account for making sure all that money is well spent. We get what we need from it, which is a reduction in the backlogs, and that over time that funding transitions to social care.
So here's my worry then, right? I mean, John was, trying to tease out of you, when might we arrive at the sunlit uplands such that all of these wonderful tax cuts proposed by the TPA become possible? And you would fairly respond, obviously, the circumstances of the last 18 months have been, horrific, and I think even those of us on the low taxable state side would agree. But we've got public sector pensions, we've got a lot of social care savings to do. That's basically an unfunded liability. We've got the cost of carbon net zero. I mean, it sounds to me we're not going to reach the sun at Uplands until, well, way past 2050, right? That's when John should be asking for his first tax cut.
Oh, gosh, I mean, that's pretty pessimistic, right? 2050. No, look.
Well, I don't see anything that's likely to generally lend itself towards public spending coming down over the next 10, 15 or 20 years. And I can see an awful lot of things that would, all things equal, ceteris paribus, public spending going up.
Yeah, look, you saw a set of projections for the economy and public spending in the spring that gave you a sense of roughly where we were getting to in the medium term. Now, look, some things have changed since then, but if you looked at those, and so we'll have a new set of projections and forecasts in the autumn. If you looked at those in the spring, you wouldn't have said 2050 for the time when our public finances are back in a better position. It wouldn't look like it would take that long on those projections. So I think one could probably be more optimistic than 2050. Not that that's saying very much, I appreciate, but so I know it's just tough for me to get into that kind of detailed speculation. But go back and look at what it said in the spring. You've broadly seen what I've talked about in terms of the fiscal principles I think are important. And when we're in a position when the public finances are back in a sustainable place, then of course that's the prerequisite for getting the tax burden down again. But as we've talked about, the way to help us do that is to be disciplined on public spending between now and then, right? And that's a question for me, for the government, for colleagues, for all of us collectively who care about this agenda.
You touched on this a little, but I want to probe it further in the first half of the match, and that was economic growth, right? So we've, very rough terms, since the financial crisis of 2008. So I'm not making a sort of partisan point at all here, but growth rates there or thereabouts 1.5% per annum, right? There or thereabouts, and historically 2.5%, 3% per annum. What do you put the very disappointing growth rates of the last 12, 13, 14 years down to?
Yeah, look, no one knows, right? No one has.
I do.
Oh, really?
Yeah.
Oh, great. Go on.
Very heavily taxed, ever more regulated economy.
What about all the other countries that have experienced exactly the same thing?
Well,
with no change in their tax burden in that time.
I mean, the West, essentially, there's not much difference between ourselves and the other EU countries. The fast-growing countries have, as I was saying, closer to 20%. So, I mean, that would be, in very broad brush terms, my recipe. More and more regulation, more and more taxes, slows down innovation. Don't be surprised if your growth rate falls.
Yeah. So, it all happened precisely at the moment of the financial crisis, though, right? I mean,
no, since then. No, our numbers in, say, 2015 are not particularly
I mean, I think
right?
most people, we don't have a brilliant explanation for that, right? And I think if you see it, most economists looking at it and you try and decompose the difference in productivity growth between now and then, it's hard to know precisely what has caused it, right? And actually the run-up that we saw was fueled by, as we now know, right, a lot of borrowing that wasn't particularly sustainable, right? So there's a question about how much of that was real in the first place. So, but where we are, what's going to drive it up over time, which I think is an absolutely fair point. So I've approached this a little bit in a micro sense. Look, but in a macro sense, how do you drive up productivity? Well, we've got a plan for growth. It's investing in infrastructure, innovation, and skills. So that's the kind of big picture message, right? The Prime Minister talked about our plan for growth. We've got ambitions in all of those areas. Become a science superpower, infrastructure, revolution, and finally get round to making sure we invest in skills properly in this country in a way that we haven't, right? If you do all those things, most economic theory would tell you you'll get your growth rate up, productivity will rise. I mean, at a slightly more micro level, I spent some time thinking about it from a firm-specific basis. And if you look in this country, we have it's been a well-documented problem. We have a long tail of small and medium-sized companies, which could, we're not realizing the full potential of them, right? They're fantastic businesses, but if you look at those same companies in other countries, we are lagging behind on a couple of things. One of them is the management practices that our small and medium-sized companies implement, and the second is their use of digital technology and digital adoption. And it's pretty compelling when you look through all the research that's been done, whether it's by McKinsey or indeed the IOD or lots of others, that if we could fix some of those, if we could help those small companies with both of those things, we could make an enormous difference to our productivity in this country. So that's why we created something called Help to Grow in the budget earlier this year, and that is never done something on this scale before, but we've created mini MBAs, which are with a world-class curriculum, which are 90% subsidised by the government for small and medium-sized companies to go and get that training and then take that learning back to their businesses and then help them grow and prosper. And the second component, which will launch later this year, is the digital component, where small and medium-sized companies will be able to get a voucher worth up to $5,000 or 50% off to adopt digital technology like CRM, ERP, financial accounting, or e-commerce. Now, all the evidence, all the research tells us that if we can do those two things, and we are heavily supporting companies to do it, if we can do those things, we will massively help them grow and drive up productivity. And I'm confident that those programs will make a huge difference over this Parliament.
I want to ask you one more question on that, but then I'll come to the floor, so try and catch my eye if you'd like to ask a question. That's similar to the answer you gave to John, and I don't know, maybe these schemes will work, and insofar as I like government spending, I guess I prefer investment spending to consumption spending. Maybe this will work. But isn't there any plan to actually to get rid of some regulations? I thought the entire point of Brexit was that the regulatory framework that we were in was not optimal. And yet I haven't seen anything much rescinded. I was hoping a blowtorch was going to be taken to the acquis communautaire. Well, so all of these things, we want to intervene to help companies. Why not just get out of the way a bit? Look at some regulations that are leading us as an economy to just spending all of our time. I mean, I think we're spending more and more of our time complying rather than producing. Yeah. So it's not very surprising that productivity is lower.
Yeah. So we've got, I don't know if you had David Frost at one of your panels.
No.
So David
we're going to give him the third degree next year.
Yeah, fine. Yeah, so David is doing exactly this with me in government. So we've been spending the last few months going department by department, collating ideas for regulatory change and actually just triaging them one by one. And he published actually the first set just a couple of weeks ago, which you would have seen, where there are actually a bunch of things that we're going to start deregulating, changing to ease the burdens on business, make sure we can take advantage of new technologies, new innovations. And I think more fundamentally than that, the work that David is doing with Kwasi and me is to actually have a new approach to regulation. And actually this is for the first time we can take a step back from first principles, think about, well, what do we want our regulation to achieve, right? What's the right principle underlying it? Some of our MPs wrote a report called the Tigger Report, so Ian Duncan-Smith, which was great. Yeah. I made sure every Secretary of State with David, and David subjected me to this as well, that we made sure every Secretary of State went and responded to each and every single one of their recommendations, right? And David and his team sat down with me in financial services and we went through, and I said, yep, we're doing this, and this. We can't do this now for this reason, and we disagree with this one, or whatever it might be, right? And that is systematically happening across government. You'll see the fruits of that in the coming months and then years, but I completely agree with you, right? We have this unique opportunity now that we haven't had for decades to look at this stuff afresh. And certainly in the bit that I'm responsible for, financial services, I published a roadmap at my speech at Mansion House some time ago, which set out what I think is probably one of the most ambitious approaches to regulation in financial services that we've seen in a long time. So this is all getting quite techy, but whether it's listings reforms for IPOs, wholesale capital markets reform, which is very technical, insurance with Solvency II, et cetera, et cetera, et cetera.
So a lighter touch.
We are going on all of those things to deliver the reforms that the industry now can benefit from post-Brexit and make sure this remains the most competitive place in the world for financial services. John Glenn, who's one of my brilliant ministers on this, we've had something, God knows, John's had probably over 200 meetings in the last 6 months with the industry where we've just been collating ideas, processing them, and now we're implementing them. So I'm happy if people think there are things in financial services or fintech that we are not doing on the deregulatory side, please come and let me know.
You've made me feel a bit more optimistic that there might be tax cuts before 2050 then, if we can get growth going. Let me take some questions from the floor. Can you wait till the microphone gets to you and then introduce yourself? We're always very rude about the BBC at the IEA, but we always give them the first question. I don't know why. Tradition, I guess. Lovely to have you here, Ian. I'll give you the first question if you could just introduce yourself to the rest of the room.
I'll respond in kind. I think you asked some very good questions of the Chancellor, but I don't think you were asked this one directly, so I'll ask you now. Are you worried about inflation, and if not, why not?
I think we already covered it actually, Ian, in the sense that, and I've talked about it before, right? Our debt is sensitive, as many countries' debt is sensitive to interest rates and inflation, but that sensitivity has increased over time, which is something that the Office for Budget Responsibility has documented in their reports. When it comes to inflation, it's one of the things that they point out is that we have a larger amount of our debt stock that is directly linked to inflation in a way that most other countries don't. It accounts for just over a quarter of our debt stock, and most other G7 countries is less than half of that. So that's a particular thing that I grapple with in our public finances. But as I said, the thesis is that the inflation pressures that we're seeing are transitory and they will work their way through the system. That said, clearly central bank governors have acknowledged that they have been surprised by the pace and the duration of that, but all the analysis tells them that their fundamental thesis remains as it was.
Then again, here at the front.
Thank you very much, Chancellor. Sam Johnson. I'd normally introduce myself as a BCG strategy consultant, but I'm going to say AFC Bournemouth fan in this context. It's widely accepted that inflation is rising, and the Monetary Policy Committee of the Bank of England will be raising interest rates at some point. Under the models that you're using to run the country and the Treasury, what is your reasonable worst-case scenario of the figures of interest rate rises over the next 5 years?
I think it's probably tough for me to say anything specific on that for obvious reasons, but our forecasting is done by the Independent Office for Budget Responsibility, and those forecasts are generally based on the market curve at the time that they do the forecast. So I don't think you would expect from them or me to have a different point of view to what the Bank of England's stated view is and the forward market curve that is in place at the time that they do the forecast. So that is, but again, they are the ones that do the forecasting independently, and they typically would use the market curve at the time that they close the forecast.
This lady right at the back there. Sorry, Jack, I'm giving you too much exercise. Again,
Hi.
if you could introduce yourself, please.
I'll stand up. Hi, I'm Edu Yongo from Lloyds Banking Group. And over the course of this conference, we've heard a lot about sustainability and net zero. I know in the next few months, we can expect to hear more from the Chancellor as well as the Prime Minister about the initiatives that they have planned. But could you give us any insider information as to what we can expect?
Spill the beans now.
As to what we can expect, especially homeowners, in terms of any incentives for actually moving towards net zero and retrofitting, etc. on that area.
So just spill the beans. Don't wait for one of your boring Treasury reports. We're live on YouTube.
I think I apologise. The Prime Minister has said it's going to publish a net zero strategy later this autumn, which will obviously deal with the question that you posed. We've made a start on it, is what I would say. So we're already investing in building decarbonisation. You rightly pointed out that the emissions from buildings and heat are responsible for quite a large amount of our emissions. So we have a strategy to decarbonise in the public sector building estate through social housing, where we've started some pilots working with housing associations, and then thirdly on the kind of retail individual side, and we're at the moment doing that largely through local authorities. So those are the different ways that we are doing it, and then obviously you'll see in the net zero strategy the policy going forward. So there are a set of existing incentives for home insulation and efficiency that are being delivered through those mechanisms.
Thank you. Charles Perez Story, Southampton Itching Conservatives.
Oh, here we go.
Yeah,
right.
Your part of the world. So I'm a chemical engineer working to support the net zero energy transition on the HyNet Northwest Industrial Decarbonisation Cluster, which would deliver 80% of the UK government's hydrogen target. But we're facing a couple of key issues on the business models consultation and the cluster sequencing consultations. early backing would provide a route for private finance to really scale up, lower the cost of production, which I know is really important to you as a responsible custodian of the public finances. So the problem is there's a lot of, obviously, multiple clusters that want to access this kind of government backing. So my question for you is, are you open to an approach where the sequence is determined by the level of technical readiness as the most advanced cluster project in the UK? And finally, as a fellow Southampton chap, would you be willing to meet with me and other colleagues from the High Northwest project, come and see the sites up in the Northwest, and to discuss it further? Thank you, Chancellor.
I think that's quite a specific question probably about how we're allocating money, which will be a question for Kwasi more than me. So I probably can't give you a specific answer on it. I mean, the broader point I'd say on that is I think you're talking about the fund that he's allocating. We also have established the UK Infrastructure Bank, which is novel for us, part of this growing state that we've been discussing. But that is a government-backed institution. It's in Leeds, and it's been capitalised with £12 billion. It can leverage in about £40 billion in total to invest in levelling up and net zero. And that institution is designed to find the types of projects, which it sounds like you're describing, where there can be a good public-private partnership, where a pound of public capital can leverage in private to help deliver on our ambitions. So, actually, probably depending, I mean, Kwasi's fund is one thing, but there are also other avenues that might work for the project you're describing.
Gentleman here.
Thank you for your time, first of all, Chancellor. My name is Richard Moyes. I'm a district councillor in Surrey, but also a supplier of wine to UK hospitality industry.
Solid.
You've done an enormous amount to support industries, jobs, families, and independent large businesses. Yet earlier on this evening, you talked about not raising VAT, but in March, VAT will be raised again back to where it was. Is that not too early? And certainly the UK hospitality industry would implore you not to do it so early, because surely 12.5% of a recovering industry is better than 20% of no industry.
A tax cut in your grasp, right?
Yeah, well, look, Richard, I know it's been really tough time. Probably, I mean, you're indirectly responsible, supplying the industry, but it's been a very tough time for hospitality. I appreciate that, which is why we've done as much as we have done, not just on the VAT side, but on business rates. And look, it is being staggered back in quite a phased way. So, and it is just going back to where it was, right? So, and it is happening, as I said, a bit now, and the rest in April. I think that's reasonable. And in fact, the main thing that your industry talks to me about now is, we've got so much business and not enough people. So that would rather suggest that there isn't an issue on the VAT side, and actually the issue is making sure you have the people you need to service all the customers that are thankfully returning through all the doors. But again, in all the balance of things that we have to do, I think that's a reasonable approach. If you think of some of the things that have already ended in terms of coronavirus support or are just about to end, actually that support is carrying on for quite a bit longer to help businesses transition, alongside business rates reductions, which over this year will be 75% discount on business rates bills, which is normally the biggest thing that I hear about from hospitality businesses. So combined with that, plus a year of lower VAT, I think that is a good amount of support in the environment that we're in.
Final question from the gentleman right at the back there.
Hi, Aidan Ruff. I'm president of Northumberland Conservatives, so responsible for a new colleague, Anne-Marie.
Yeah.
And I'm going to have to agree with the gentleman down here and disagree with you, I'm afraid, Chancellor. My industry is hospitality, specifically weddings. So you can imagine a year on April, our income dropped to precisely zero. So to carry on the football analogy, I would say the COVID loans got the ball into the penalty box, and the business rate suspension got a good pass, and furlough back in the net. However, I would give you a yellow card on the 5% VAT rate, because 5% of nothing is still nothing. So it didn't do us any good whatsoever until July, at which point, World Cup winning strategy. So we're going to take 5 years, I would say. Our reserves have been decimated supporting the business. It's going to take us 5 years. This is the question coming. 5 years it'll take us to build back the same, never mind build back better. So a 10% VAT rate for the next 5 years, as France and Germany did after the financial crash, with nowhere near the shock we've had, would be brilliant. 12.5%.
What's the question?
At the best. This is a question.
Do you agree?
Will you look at it? I hear you saying you think, it's great,
right.
But will you look at it for the next 5 years and include alcohol sales?
What can you do to get more people to get married to help the hospitality industry?
No, well, first of all, look, I know it's been incredibly difficult, so thank you for bearing with it. I know it's been a tough year for everyone in hospitality and for weddings. I've been doing what I can to make sure that your businesses have been able to be open when we can do that. And I feel good about the support we have put in place. I think it's easy to find one thing that France does better than us or Germany does better than us. I'm pretty confident if you look in aggregate at how we've supported the economy through the last year and a half, I think you'll be hard-pressed to find a country that has done more and done more quickly in the way that we have. And I spent a lot of time benchmarking across all those countries. I mean, you mentioned loans, you mentioned other things. They did not do anything like the bounce-back loans in France, for example. The furlough scheme here was much more generous to businesses than it was in those countries, which had employer contributions running much earlier. I mean, I could go on, but and I know it's not going to be perfect, and I know it's still tough, and I appreciate that, and we're doing everything we can to try and help you get through. And on bounce-back loans, for example, we've extended all the repayment periods out for 10 years, and you can have interest holidays on all of those, or permanent holidays, or 6-month holidays. So take advantage of those if you're still struggling with cash flow. That's what that's there for. It won't impact your credit rating if you do it in advance of the bill coming due. But look, I'm confident that things are coming back to life, and hopefully you're seeing that in your forward bookings. I'm certainly seeing it in my own patch, where people are actually quite positive and confident now, because all the bookings are coming in for weddings, for holiday cottages, and all the rest of it, which is a good thing. And that's ultimately the best way to support your business, is to get people back in the door as quickly as possible.
We're clean out of time, but I just want to finish by asking you, Chancellor, how optimistic are you feeling? This has been a really difficult year for the country as a whole. Obviously, a really, really difficult year for all of you in government. Permanent crisis management in unfolding really unpleasant circumstances. Are things back to normal? How much better is the build back going to be over the rest of this Parliament?
I am optimistic about the future. I spent a lot of my speech yesterday talking about the future and why I feel optimistic about it. And I think it's all very well just saying that, but it needs to be grounded in something. And what gives me confidence and optimism about the future is the resilience I've seen from all our small and medium-sized businesses, especially over the last 12 to 18 months. And if you guys have been able to get through that, those of you that run businesses, and emerge on the other side of this thing, not just having survived, but actually now thriving again, growing employment, thinking about new ways to do things, that's what gives me the confidence, actually. It's the entrepreneurial spirit of our small and medium-sized companies. And that's why when I talked about the future yesterday, I think we can build a much brighter future based on these forces of science and technology and imagination. And I'm going to do whatever I can to support you that have businesses on that journey. And of course, there are going to be bumps in the road, and we'll take time to get there. But no one should feel unoptimistic about it. I think it's going to be fine.
Rishi, a game of two very good halves. Thank you very much for joining us.
Much.
And thank you all for being here as well. Thank you for those who are watching on YouTube back at home. And just to close out Think Tent for another year, we look forward to seeing you next year. Please welcome back John O'Connell just to say a few words of thanks.
Again, what a way to end Think Tent. So thank you, Rishi, for joining us. And thank you all for coming at various times to make what I think was a very exciting programme, packed houses, lively debate. So thank you all very much for taking the time to come and join us. Thank you to the teams at the TPA and the IEA for all of your hard work putting this together. And thank you to the teams at Manchester Central as well for all of your help. So again, thank you all, and hope you all have a good evening. But join me in thanking Rishi again.
Thanks so much.
Great.
Thanks
No,
so
it's
much.
really good. Really, really good.
Excellent.
Thank you. It's like coming home.